All right, let's talk about 2026. What if I told you that this year isn't going to be about some massive crash or another epic bull run? I think it's shaping up to be one of the most misunderstood years in recent memory. A year that's really designed to shake out the impatient, but at the same time, reward the disciplined. So let's break down why.
To really get a handle on where we're going, we first have to look at where we've been. Let's rewind the clock to 2023. The S&P 500, it delivered a massive 26% total return. Just an absolutely incredible year.
But the party didn't stop there. The momentum just kept on rolling. In 2024, the market basically did it again, cranking out another 25%. So that's 2 consecutive years of just huge growth. And that brings us to last year, 2025, which closed out with a very, very strong 18% return. You add that all up, that's 3 straight years of phenomenal gains. Okay, let's just be really clear about this. Gains like these, year after year after year, this is not normal. This 3-year sprint has stretched valuations, it's reset everyone's expectations, and it's basically set the stage for a very different and potentially very volatile 2026. So how do you even get a read on a year like this one? Well, you look at January. Seriously, the economic data that gets released this month is going to be absolutely critical in figuring out whether the big story for the rest of the year is going to be growth, inflation, or interest rates. And believe me, the calendar this month is just packed. So on the 7th and 9th, we get labor market data that tells us how strong the job market is. Then right in the middle of the month come the inflation reports, the CPI and PPI. That'll show us that prices are finally cooling off. On the 22nd, we get the big picture on economic growth with the Q4 GDP release. But the main event, the one everyone is watching, that's the Fed's rate decision on the 27th and 28th. That's the one that's going to set the tone for the entire year. So, with all that context, let's talk about the risks, the headwinds. The first major one facing investors in 2026 is probably the most obvious one: valuations, especially in the tech sector. After years of those incredible gains, a lot of the big tech stocks are priced for absolute perfection. And this creates a really precarious situation, right? Because when expectations are this high, you don't actually need bad news for prices to fall. You just need news that's anything less than perfect. It's really a recipe for volatility and some frustrating returns, even if the companies themselves are still doing really well. Now for the second headwind. And this one is tied directly to that crucial Fed meeting we just talked about. See, for the past year or so, the market has been pricing in this big assumption that interest rates are going to fall, and fall pretty quickly. But what if they don't? And this is the core conflict right here. The market is hoping for and betting on a nice, clean path of rate cuts all year. But the big risk is that inflation stays sticky or that wage growth stays strong, and that forces the Fed to keep rates higher for longer. That scenario would really hurt valuations. It would increase borrowing costs, and it would make those super popular growth stocks look a whole lot less attractive. And finally, the third headwind. This one's less about a specific number, and it's more about how the market itself behaves when things get uncertain. The triggers for a sell-off, they're always out there. We're talking trade tensions, military conflicts, election uncertainty. We've seen it all before. But the true danger usually isn't the event itself. It's the wave of emotional investors who overreact to the scary headlines and cause a big sell-off based on fear, not on fundamentals.
Okay, that's enough of the doom and gloom. Let's pivot from the risks and talk about the major opportunities for 2026. And the first one is a biggie: the evolution of artificial intelligence.
If the past few years were all about the hype surrounding AI, then 2026 is all about execution. It's show me the money time. Companies have poured billions and billions into this technology. Now, investors are demanding to see a return on that investment. We need to see new revenue, or at least significant cost savings. The rubber has to meet the road. And what's really crucial here is that AI isn't just a tech stock story anymore. It's becoming a foundational tool that's being integrated across the entire economy. We're seeing it impact productivity, logistics, healthcare, finance, you name it. And what that does is create broad investment opportunities far beyond just a few of the big-name tech companies. Now for our second opportunity. This one is pretty much the mirror image of that interest rate risk we were just talking about. What happens if the Fed does deliver on rate cuts? So here's what a lot of investors miss. We don't necessarily need huge, aggressive rate cuts. What the market really truly craves is one simple thing: clarity. A series of consistent, predictable cuts removes uncertainty. And historically, that kind of stable environment is a huge tailwind for small-cap stocks, for real estate, and for business investment in general.
And the third major opportunity for 2026 might just be the most overlooked. In a volatile or slower growth environment, sometimes boring is beautiful. This is where quality companies that have growing dividends can really shine.
Now, we're not talking about those risky high-yield traps here. No way. We're talking about the gold standard, dividend kings. These are companies that haven't just paid, but have increased their dividend every single year for over 50 consecutive years. Just think about that. They've navigated recessions, market crashes, high inflation, and they still consistently rewarded their shareholders. That is true resilience.
So, we've looked at the headwinds, we've looked at the tailwinds, but the single most important factor for success in a misunderstood year like 2026, it isn't the market, it's you. It all comes down to your mindset and your behavior.
Ultimately, I think two types of investors will emerge in 2026. The ones who struggle are going to be the ones chasing headlines, reacting emotionally to every little dip, and trying to time the market. But the ones who win, they're going to be the ones who stay invested, who stay diversified, and who just focus on the long-term power of compounding.
And really, that's the question that's going to define your year. In a confusing, potentially volatile market, your strategy and your discipline matter more than anything else. So which path are you going to choose?